Hello, everybody. Welcome to Wednesday. The S&P 500 was down about 2.3% today, kind of breaking a record of 356 days in a row without a 2% or more drop on the S&P 500. Goes back to 2007 since we've had that kind of run. So it's been a fairly nice run altogether, even though we've had some ups and downs, without that big drops per day. Today was the day. And so really what was happening, we had earnings last night from Tesla and from Google. Tesla missed their earnings by a lot. They dropped 40% earnings versus the same time last year. And this is after the 55% miss that they had, or drop that they had last quarter. So, that kind of kicked things off on a negative way. Tesla was down 12%. And then, Google's earnings were actually pretty good, a lot of good things, but they were talking about spending a lot more money than people expected to ramp up their artificial intelligence component in their company. And I think what's interesting is that people are starting to realize that some of this right now is actually just cost, development cost, and maybe not so much of a revenue source that's coming in from some of these pieces of artificial intelligence, especially for a company like Google. So Google is down 5% today. We're still seeing a rotation that's happening out of these large cap names, that's been going on here since, the CPI report that came out for June. And so anyway, that's what's going on today. The things that we want to watch for, of course, primary direction. We're looking for those lows to stay above, the last low. So the last low we had was at 49.67, which is about 12% below the high that we established before we started coming down here. And so, likely going to continue down. This is a soft time of the year, on top of the fact that we already have some momentum to the downside. I'm not sure we'll get down below that, 12% drop from high to get to that, lower low and change direction here in terms of primary direction. But we could get close. That's not unusual. You see markets like this get some, momentum. Just keep in the back of your mind that last year, the market fell from the 31st of July till the 27th of October. It was down 10% in that time frame. Several little run-ups during that time frame, but nothing to get to a new high. Finally got down, and then things took off, really took off. And we still ended up with a great year. November was an 8.9% up month, which is a really big one. We've been kind of running ever since then. So again, heading into this time of the year, not too surprising to see some softness that's happening. I'm not worried about this at this point in time. We'll talk about it more if we do start to change primary direction, that type of thing. And that's why we stayed in last year. We never got to a situation where we changed primary direction. And it was a good thing because the market took off. And even in the first week, I think it was up about 5%. So it's easy to miss out on these big run-ups. So, hang in there and see what's going to go on. And we'll see what kind of rotation happens within, the portfolio, for example. But this is the normal part of the market. This is how a market gets to another high and really keeps going on a really good year. The average, again, a second half of a year during a presidential election is up 11%. The average second half of a year when the first half was at 15% is 10%. So historically, we're still looking at what should be, good second half. Now, I will say earnings have to be there in the end. So if we get lots of surprises from all these big companies, that's going to be an issue. Having Tesla have a surprise, that's not such a big surprise to me, honestly. They have always had a very high valuation and all kinds of different things going on. So let's see what happens with Apple, Microsoft, NVIDIA, and some of these other companies. Because even, Google was down today. But even then, you look at what they did, it was a good earnings report altogether. Just again, the market's getting into a negative mode and starting to look at those things that way. So let's see. Next week, we get some big reports from big companies, see if that is better. We'll see where things go from there. But I look forward to talking to you tomorrow. Thank you very much.